The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, today at the break at 9:30, we're going to have Bill Meridian of Cycles Research, Vienna, Austria, as our guest. And we'll start out the show like we usually do, looking at the German DAX because that's what they trade over there across the pond. They do some S&P also, but that DAX is a big one. It trades almost tick for tick with the S&P, but many times it will lead the market. As you can see from this hourly chart that we've posted, we've been in an uptrend. Boy, that's a big surprise. We've had a little bit of a pullback from the 1.618 ABCD level, but nothing really to make any amends at all. I wanted to go over a couple of things. First of all, the first thing I wanted to go over, I was listening to John Logan, which I try to do before the show every day. And then we'll just get on to some of these other things. But he was talking about Tesla, and this is one of the things that we were looking at a few weeks ago for a potential island reversal. And as you can see, that has certainly happened. This is what we have a possibility of doing in the Dow Jones, but something unusual happened this past week, and that is that the Dow actually filled gap number one. It was down every day from March 1st. Basically, what this means is that everybody that bought stocks into the, after the election or after the joint Congress speech by President Trump, are now showing losses, with the exception of those that have bought 25 of the NASDAQ stocks. Those folks would still be showing a small profit, but everybody that bought any of those Dow stocks are now underwater. Whether that means anything or not, I don't know. But, we still have several more gaps to look at. But, gaps are meant to be filled. There's still two more gaps on the weekly chart in the Dow Jones, and there's three on the daily chart on the Dow Jones. But we did finish the first one, following the speech. The next thing I wanted to mention is the fact that, the bullish consensus from Investors Intelligence, we'll put this up so we can take a quick look at this here, is basically near an all-time high, and we're near an all-time low in the number of bears. As you can see here, the spread there is pretty wild. Now, again, they're saying this doesn't mean very much, and, maybe it doesn't. I don't know. But that neither here nor there. That's just something that we ought to pay attention to, because it tells you that the market is extremely overbought, even though we were down 4 days last week. So those are just things that we're keeping an eye on. I know the Federal Reserve is going to be working on their plan this week with their interest rate increase. And of course, the whole world is basically saying that interest rates are going to go higher this time. I think it's 100%. But frankly, that doesn't mean it can't go to 120%. Maybe there'll be more people looking for higher interest rates than one might think. But let's take a quick look at the long-term, play the devil's advocate here. Look at this long-term Treasury bond on the weekly. As you can see, we took out the December lows by about a half a point. We're trading just about at that level right now. We have those two wide-ranging bars down these last 2 weeks. That's usually extremely bearish, and there is a very strong probability that we're going to see an interest rate increase here. But we are at some pretty major support. Now, the reason why I'm showing you this chart is because there is a divergence here. Remember that the Treasury bonds are 1/6 of the volatility or the volume that we have in the Treasury notes. That's the big one. The Treasury notes is paper that is 10 years or under, and bonds are usually 20 years and older. in maturity, I mean. And if you'll take a look at the Treasury note chart going back over that same period of time. Now, this is how they calculate interest rates for cars, mortgages, credit cards, etc., loan sharks, whatever they do. But you'll notice that we have not taken out that low from last December as of yet. We shattered it, of course, in the Treasury bonds. We did not do it in the Treasury notes. So there is some divergence here. And as John Logan mentioned, the whole world is absolutely, one way on this one. They really believe rates are going to go higher, and they have been going higher, folks. We can look at a chart and you can see that these things have been going higher for quite some time. Now that the Federal Reserve is going to come out and tell us that rates are going to go higher, we should believe them. Hello? I mean, what's wrong with this picture? That's something that you have to, pay attention to. So anyway, those are what we're watching now. There's going to be some really wild volatility around Fed time this week. The kicker here is this, folks. If by some stretch of the imagination, and I really stretch this imagination, that the Fed would not raise rates this time, to me, that would be so bearish to the stock market that it would scare me, because either the Fed sees something that nobody else does, or there's something wrong with the picture. And I would have to say that I would take the former, that they see something, because those folks there are pretty smart with the planning. They don't always follow what the market wants, but they're pretty smart, and they control, the game, so they can change the rules of the game just like they usually do with quantitative easing and stuff like that. Now, I just wanted to share with you where we are in the gold market. I'll bring this chart up. This is a 4-hour chart that I put into the newsletter this past week, because we are at a real critical time here. As you see here on this gold chart, this 4-hour gold chart, we had the big ABCD structure down from the 26th of February. What I want to point out here is that the last BC rally was $17, which is 1/2 of the harmonic number. And the move down between A and D was $70, and the harmonic numbers 34 times 2. It was an exact 786 retracement, a 1.618 expansion. But the key now is, what do we do on this next rally that we get? Because if it only goes to the $78 to $17 or to that 382 level, we could be looking at something that is still very, very bearish. And if we update it on what's happening so far on Sunday night and Monday, you'll notice that is exactly what's happened so far. We've made a 382 retracement of that last high back on March 3rd, which was $17. And yesterday's, the rally between Friday and today was exactly $17. And so far we've come down to 1202. We've already backed off $1,000 from that high. So the key is, if we get above that 1212 again, then your trend has changed. But right now, the trend is certainly still to the downside. The other thing that this chart shows you on the gold is the great volatility that you get for your margin. The margin for the S&P and the margin for the gold are very similar, and yet your volatility on the gold is 3 or 4 times what it is in the S&P. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've had a request to take a look at Goldman Sachs. This has been the strongest stock in the Dow, and because it is price weighted, it's the most expensive stock in the Dow. You can see that we've completed that 135 expanding triangle pattern. At that point, you have a 1.27 expansion. This goes over the past several months, too, by the way, folks, so it's a pretty long term. And you have a 1.618 expansion from the January high and a 1.27 expansion from the February high. So this is a possibility that this market has made some type of a top. Now, remember, the Dow has moved well over 3,000 points or more. 3,000 points, and I believe 1,000 of those points is related to Goldman Sachs. If not 1,000, probably pretty close to 800. So this shows you the bias, that we have in the Dow Jones. So keep in mind that the Dow, when you're looking at it, is a price-weighted index, so it's not like the S&P, which is cap weighted, and the New York Stock Exchange Index, which is cap weighted. So this, the really way you should do that, take the number of shares, multiply it by the price, and that gives you the value. That's why I believe Apple is the most valuable stock in the world now, based on its new highs that we've had up here in the 136 level. As a matter of fact, we had 3 Dow stocks make new highs on Friday, big ones. We had Apple, and we had 3M, and we had, what was the other one? Shut the front door and raise the rent. It was one of the big ones. Got it. I put it in the newsletter, but I can't remember it now. Having a little senior moment here. I seem to have more and more of those as we go through. Oh, by the way, I have a very interesting story to tell you about the trip to Hong Kong. We have some really dear friends over there because we've been going there for many, many years. And one of them happens to be an extremely successful real estate mogul. And I mean really successful. Anyway, he's very interested in politics in the USA, and he showed me a picture of Fortune magazine that showed the picture of Donald Trump, and the magazine was split in two places. One was Trump on the bottom part of the magazine, and the other one was Trump on the upper part of the magazine. One he was smiling, the other one he was frowning. And the smiling was the Trump promise. And then on the other part of the picture was the Trump peril. So I was giving you both sides of the coin. And of course, he asked me, what I thought, and I said, there's very few things I know less about than politics. And I said, so I'll have to defer that, to somebody else. And as we were leaving the building, we had gone to lunch with him in the building that he owns and the restaurant that he owns, which he's really quite fun. But the taxi driver showed me the same magazine. And that's the only reason that I happened. Sarah took the magazine because he offered it to us, and I brought it home. But the cab driver, these guys don't vote. And, of course, he was chatting with, Sarah in Chinese, and he happened to be a Trump supporter. So it was 50-50. And believe me, they really have an opinion of it. I mean, it's really very, very interesting to see what's going on. Okay, let's talk a little bit here about the crude oil market, folks. Crude has broken down quite badly. As you can see here from this chart, I don't think you even have to see a chart. You hear it in the news all the time. But we'll take a little, yes, this is true. I do. That Duffy, you're absolutely true. I do need a defrag on that, but we'll see. Anyway, we're looking at what's going on. As a matter of fact, you're talking about New Zealand. I'm going to be doing a interview with the traders in New Zealand on the 16th. That is Thursday, I believe. For an hour and a half, they're going to be asking me questions about what I do and my history of my trading and stuff. Have some requests, but that'll be interesting to see what's going on. Okay, let's move on to the next one. If we'll take a look here, I don't know, you guys have already heard that stuff with me. I mean, everybody knows, from TFNN. I've been around too long well, it's been 10 years since I've been doing this for Tom, which I enjoy it very much. Sometimes it gets to be a little nerve-wracking when no one calls in and asks for questions. But like, we're taking a look here at crude oil now. As you can see, the market has broken down very, very badly. We're seeing the same thing in heating oil, and we're seeing the same thing in gasoline, except gasoline has a much higher is making a much higher bottom than we are with the oil. The oil and crude are actually breaking down more. So if we will just keep an eye on that, because both crude oil and treasury bonds are extremely oversold. So don't be surprised if you see a rally in these things, because these markets are very, 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 very oversold. I've had a request to take a look at the British pound versus the euro. Tony, I'll send that to you under special email. But the euro, I will be happy to talk about, because I look at the euro each day. As a matter of fact, the euro is setting at a really critical level right now as we speak, at this 106.60 level. We took out yesterday's high with a great deal of ease, and now we are backing off to a small retracement on this, and we will take a look at the euro just as soon as I can find. Here it is. Hold on, euro. This is what I think could happen in the euro, and I'm not so sure that that this is the right thing to do as of yet. But with the Fed coming in, let's just get this ready so this will pop up. Hold on one second, and there we'll go. You'll see the possibility here that we could get a rally all the way up to the 109 level. Now, this would be really unusual for that to happen, because when the Federal Reserve raises interest rates, that means our rates are even more out of line than where they are in Europe and other parts of the world, like Japan. So the theory is that people bring their money into the United States to get that higher interest rate, which makes sense. What would you rather have, a 3.5% rate, or would you have a rate that's 0.5% or 0.25%? So that's That's the real reasoning. The problem is that's the theory. Sometimes the theory doesn't work as well as you would think, but that's what usually happens. So I would think that would be an ideal situation. Listening to what John Logan said today, he thought that the dollar index had a possibility of moving to the downside. And if we take a look at this daily chart here on the dollar index, you're going to see that we've had a really nice ABCD move from September. We got up to almost 104. We backed off to a perfect 61% retracement at 99.25. We rallied to a perfect 61% retracement at 102 and change. And if we get much weaker, and i.e. the euro going higher, we would be looking at a move to the downside of all the way down to that 97.90 level. Boy, that would set up what we would call a Christmas Day buying opportunity, because that's near the old highs from last July, and that would set up a potential 20-man line there. So if they ever get there, that would be an ideal. That would be the equivalent of the euro getting up to that 109, 110 level, I believe. Now, that shouldn't happen given the fact that interest rates are going to be raised here this week, but that doesn't mean it won't happen. So let's chance favors the prepared mind. We'll have Bill Meridian on in just a few minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have on the line Bill Meridian from Cycles Research, Vienna, Austria. Bill, are you there?
Yes, Larry.
Good talking to you, my friend. Thanks for
Same
joining
here.
us this morning. What time is it over there? Afternoon, right?
It is 2:30 p.m.
Okay. I've got your first chart posted of Mr. Trump shown as a meteor. You want to go ahead and start the show?
Oh, yeah. Well, I'm just saying, I'm just backtracking now. Last June, MarketWatch ceased the Hulbert operation that they had purchased from Hulbert, where they track over 500 newsletters. And I called, well, in fact, I called Arch Crawford. I said, you know what this means? And he said, yeah, lack of interest in anybody, lack of interest in buying investment newsletters, which is probably a buy signal. And then there's the second one from the cover of Der Spiegel. That was November or December. And it says at the bottom, the end of the world. So that was buy signal number 2. So if we switch to the next page,
Okay.
well, let me just say that it's always a choice when you do cycles work. Do you go with the cycles or with what the technicals are telling you? And when they agree, it's easy. And the cycles pointed down in February. The market rallied, which is bullish. I should have paid more attention to the technical indicators. So when the market rises in a cyclically weak periods, this is bullish and vice versa. The first indication we had, other than the previous two you just saw, now we're shifting to momentum studies, the sell in May period closed on the upside. Something go away, it rose. From
Uh-oh. I have lost contact. I don't know if that's what's happening with I don't know what's happened. I don't know, folks. Can you hear me? Because I think we've lost contact with broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. I think we've lost Bill. We'll try to get him back on the. We'll try to get him back on the line here. We've evidently lost contact with Bill. We'll wait till they get him back together here.
Hello?
So we're starting out. Oh, Bill, there you go. Thank you,
Hello.
my friend. We lost you for a second.
Yeah.
Go right ahead.
I know.
We're on momentum studies.
So in February in a post-election year is usually down, but it was up. And the bullish period, December, January, February was up, and that is bullish. So you see how these things are rolling forward and coming to the same conclusion, bullish. So my conclusion is the market will be higher by January, and that the Dow will probably be in the 23,000 range at least. But we do have a projection, a cyclical projection for a correction somewhere between mid-July through October, but we don't have to worry about that right now. So let's go a little shorter term. Shorter term, the technicals in the market do not look constructive, but the cycles point up. The result, I think, will be that the market will be 1 or 2 or 3 S&P points higher by the end of March. In other words, not very exciting. And right now, we're in, I believe the FOMC meeting is this week. Is that correct?
Yes, I believe it's the Wednesday, I believe.
And it is OPEX week, option expiration week. And look where I have, this is the histogram of expected return in any post-election year ending in a 7 in the month of March. So look, notice that it's at a low in the 14th, but it's up after that. So right now we're in that little move up, and I think we're moving up this week if you're a short-term trader. And on Friday, I think it's a short because you will have this downturn in that cycle that you see at the bottom. Plus, it'll be post-OPEX week in March. So that's the very short term. Mm-hmm. So, but I'd like to move on. I have a lot of material here today, and people asked me about Donald Trump, so I have more material here at the end. So let's just jump to bonds.
You got it.
Now,
go ahead.
Bonds, I don't pay any attention to cycles, Bill. Okay, well, the 10-year note has declined 77% of the time in March since 1982. From March 18th to 24, it's been down 88% of the time, and the period from March 17 to 28 has been down 82% of the time. And as Larry and I know, some wise man once said, if you can be right 60% of the time, you can make a fortune. And yet, institutions pay little attention to this. So right now, I own the inverse ETF TBF, which is the ProShares 20-plus year Treasury exchange traded fund. And if we go to the next slide, you'll see the histogram. And note that here we are right now at March 13th, and we're approaching one of the most bearish times of the year to hold the 10-year note as outlined on the previous page. There you see a graphic form. How to turn $100 into, let's see, 98.50 in only 30 days in the bottom strip.
Oh, hold on. I wanted to see this one again. All right, this is the bottom part. This is on page 6?
Yeah.
Okay, hold on a second. I'm on page 3. How did I get to page 6? Boy, you gave me a lot of material today. Hold it. I've got something wrong with. See, there's. I think I've got the pages messed up, which would not surprise me here. Are we in the one that's?
You just go page forward.
Yeah. Well, the problem is my PowerPoint doesn't always work that way. So I.
Oh, okay.
Wait a minute. Maybe I could do that. No, that doesn't work. You know, I'm not very technically oriented. You and I know that, but a lot of everybody else does here too. So we should be on the one that says all post-election years in March. Is that what the one we're on?
No, average daily expected return of U.S. notes.
Okay, just a second. Wow. What did I do wrong? You know, I don't even have that chart.
You have the PowerPoint that I just emailed to you?
Yeah, I'm on page 4. It says page 4, it says all post in March. It shows March, and it shows $100 on the left-hand side over there, but I don't
you have
see.
To go down 2 more to page 6.
2 more. Okay, 1, 2. 1982 in the month of March. Okay, I'm ready.
Yeah.
Now takes me.
You see that those negative bars at the bottom, you see that is the net result. If you invested $100 every March going long the 10-year note, you would have turned 198.50 in only 30 days.
Boy.
So that's what
a
we're
good
looking
one.
at.
Yeah.
So
okay.
I think the notes will hold up this week, I think, but then I think they're a strong short. And then I think I would close out the short positions that I recommended in the Cycles Research newsletter back on the first day of March. But this is how that was developed. So now if you go to the 10-year yield index, just for confirmation, that looks to me like that's the next page, page 7.
Yes.
Now you notice, I think that's a wave 3.
Uh-oh. Did we lose connection? It's unusual for Skype to lose connection again, boys and girls, but sometimes in Mrs. Rosner's neighborhood, that's the way it works. Well, we'll hopefully get Bill back on in just a second again. I don't know what's wrong with Skype today, but we'll move on. Anyway, I did want to mention to Bill that he actually, reversed his or got out of his short position and the stocks that he was talking about. Yeah, Bill, we're here. Go right ahead. We're on the 10-year yield index.
Yeah, which looks like it is going from a wave 4 to a wave 5. So that would go up for yields and down for bonds. Mm-hmm. And now I wanted to give you a very quick gold update on the next page.
Okay, Bill, before we do that, by the way, the folks wanted to thank you because when you sent me the special alert on February the 6th about do not be short stocks, I posted that into the room, and you were absolutely spot on. So they wanted to send their thanks, and we certainly appreciate it. We'll take a break here. We'll be right back.
Take a break.
Okay.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back with Bill Meridian of Cycles Research. Bill, we have the gold update, so you want to go ahead?
Yep. Well, very briefly, this was in the Cycles Research newsletter for February, but what happened here, you see gold rising into 2 resistance lines coming down. At that moment, the gold cycle, which is the regular seasonal cycle, which is based on what? The sun. That's where you get a calendar. It's a relationship of the Earth and the sun. And also the lunar cycle, the 28-day lunar, they both topped at the same time, and you can see the result. This is a weekly graph, and you see you got a hook sell signal where you went to a new high but closed at a new low, and now you're at a 50% retracement. That's how just two planetary cycles led to a...
Oh, I wonder what's wrong with this. The chart should be in there. The gold chart should be there. I don't know what's happened, but we'll do it as we go through. Well, boys and girls, as Mr. Rogers said, things don't always work in the neighborhood, but we'll get it working, I hope. I believe the gold update chart has picked up. I don't know why we're not getting Skype stuff from working today. And whoops, I lost me too, I guess. Is that correct? No, I'm still there. We lost Bill. Anyway, I'll keep going here. But anyway, I posted the gold chart that I was looking at, the shorter term one. And as you can see, that's what we've done so far. Is we've just
Can you
are
hear
you
me?
there, Bill? Yeah, we'll go right ahead. Start with the gold update again. You just finished with the sun cycles.
Well, at that point, the solar cycle topped, so did the lunar cycle. So you can see the net result on the weekly chart. You got a hook sell signal, and it's now at a 50% retracement, which means we'll probably get a little gold strength this month, but I think we'll get another decline toward the end of the month, and that'll be it on the downside for gold the month of March.
So you think gold
move-
could bottom
move to
after
the-
March sometime?
For the short term, yeah, but I still think it's in a bear market.
Okay, all righty.
So
What's-
can we drop down to the next one?
This is President Trump's eclipse.
Yeah, well, this is something we covered a while ago, but at that time, just for those people who follow this, I have a 9:51 a.m. birth time, which Lois Rodden got from Trump's mother, and that was the one we all used until he got to be president. And then they issued a birth certificate with a time of around 10:56. Well, the 9:51 a.m., I called my old friend from New York, Marla Maples, and she said, well, Tiffany and I used 9:51 when we had his chart cast. So I rectified it, and I can guarantee you this is the one I'm going to use. So that's just for everyone out there who was wondering, because I left off last time saying I wasn't sure when he was born because of this new time. There is an eclipse coming in August. It is at 29 Leo, which will be right on his Mars at 26, 27 Leo, which could be read as a sign of danger. So if we go to the next one.
And that was the one for August?
Yeah, August 21, 2017 eclipse.
Yes, we've got that one up.
That is conjunct Regulus, which is one of the 4 royal stars of Persia. It's a fixed star, 29. When the eclipse fell there in 79, the Shah fell from power. So you immediately have a direct connection to Persia, which is today Iran. So if we can go to the next one.
Okay.
I'm sitting having espresso at 11 a.m. July 14th, 2015, and they come on the local television and they say the United States and Iran just reached an agreement, and that is 11 a.m. July 14th, 2015. And when you make an agreement or a treaty, you want a strong, well-aspected Venus. Well, here you have Venus at 28 Leo, which is where the eclipse will be, but it's part of a T-square, which is not positive, and it gets worse with the next slide, because that is a 90-degree dial, and that shows that Mars and Pluto are 45 or 135 degrees from Venus, which is already afflicted because it's part of a T-square. This is a dreadful-looking chart, and it's going to be activated by the eclipse. Eclipses usually activate charts about 90 days in advance, so take 90 off of late August, and you come up with late May. So let's just add in one more chart that you did not see last time, and that is, this is one of the horoscopes for the United States, and Charles Jane used to say that the United States really wasn't a viable entity until Cornwallis surrendered at Yorktown, which he did October 17th, 1781, on the day of an eclipse at 25 degrees of Libra. Well, some people out there who know where the planets are saying, wait a minute, isn't Uranus going to oppose that? Yes, Uranus is going to oppose that, which of course it only does once every 84 years. So to catch the track record, let's go to the next slide. 1850, Uranus opposed that degree, and Zachary Taylor died in office. 1889, at the conjunction, President Harrison takes office. No violence surrounding that, but it was just a change in power. 1933, FDR is in the presence of Mayor Cermak, who was shot and assassinated in Chicago. Some historians say Al Capone was after Cermak, and some historians say they were trying to shoot Roosevelt, but they got the mayor instead. That was at the last opposition. 74, the conjunction, Nixon resigns. So you can see how I'm building a case here. So if you go to the next slide, I'll throw in another one. This eclipse is the member of Saros cycle 145. Now, it was Charles Jane was the first person to say an eclipse at the beginning of a Saros cycle, which is about 12 to 1300 years long, whatever is going on at that time, it picks up that theme and it carries it forward. So at that time, 1639, the Ottoman Empire, which is now Turkey, ended its 33-year war with Persia, which is now Iran. And there was a conflict over their border. And so this now draws Turkey into the question. And so if we go to the next one, 16, that is the actual path. It cuts the United States in half. This bears a great similarity to the birth eclipse path of Robert E. Lee and Harriet Beecher Stowe.
Oh, shucks. I wish I knew what was going on with the sound, boys and girls, but it's unusual for Skype to have problems, but we'll see. He'll be on in just a second, and we'll go on to the next one. Doggone it. We're going to have Bill on again because I hate to see this. I don't know about aliens not like it, but Skype certainly doesn't like it. That's for sure. Okay. There you go, Bill. We're back on. We're back on. Sure, go ahead. We're on with the path of the eclipse.
Okay, I think the Illuminati doesn't like it, so they're zapping me. So right here, the eclipse cuts the U.S. in half, which is usually, when you see that east-west, it's divisive. It cuts the country in half. So whatever the events are coming up in August. And now if we go one further, you see that is the progressed horoscope for Donald Trump for August, and his progressed sun is 1 Virgo, only 2 degrees past the eclipse point. So his progressed sun will be eclipsed. And if we go one more, I'm getting very esoteric here. People who do astrology will know this. This is a converse progressed chart, and we'll notice that the eclipse is opposite his midheaven. So this is more confirming information. And if we go one more, we don't know what time Mike Pence was born, but this is on his Pluto. And the eclipse was on Pluto in the FBI director's chart last September when he got caught up in the Hillary flap. And so if we go one more, this is Saros cycle 145. 36 years ago, that was these eclipses occur every 18 years within the 12 to 1300 year period. 2017 minus 36 is 1981. Okay, we have an ad.
Yep, come back after the ad, okay?
Sure.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research. And Bill, I posted the rankings for Market Timer. You were Timer of the Year. Congratulations, buddy. I think that's really great to see that. Also, since we've only got a little bit of time left, I noticed you have a book that you're talking about. Do you want to talk to us a little bit about that book? It looks like we've lost Bill again. Anyway, folks, he has a book out on eclipses and some of the stuff that he's covered here. You can catch that at the TFNN. If not, if you want the charts that we're focused on today, if you'll email me at larrypesavento@gmail.com, I'll be happy to, to do that, to see if that's going, if you like that sort of thing. So
I'm back in time to just say goodbye.
Oh no, that's okay. We were giving you a nice little promo about winning the market timer, and then also I told them about your new book that's come out on eclipses. So hopefully you'll get a little business out of that, and maybe we'll have you on in a few weeks again.
Sure.
By the way, one last thing on crude oil. What's your feeling?
Well, thus far it hasn't worked. I mean, if both the dynamic and the seasonal cycle are pointing up, but oil is not responding, so I would have to say that is very bearish for May and June, because then that's when the annual cycle turns down. I mean, it's up April, May, but it's not responding on the upside. So,
okay, that makes good sense. Well, we'll certainly keep an eye on that. I had one other thing to mention again, and that was thanks for telling us on February 6th, that you abandoned your short side of the market, and that was a big help because we discussed that here in the room. And, and of course, with the speech that came out, my goodness, the market just, exploded to levels that no one thinks it would go to. But as you mentioned, it can still go a lot higher. So we'll be watching it very, very closely. And if you'll be so kind as if you have something special like you usually do to alert me, I will tell the folks in the room that this is what you're watching, because I think it's a good thing to look at. So thanks for joining us, Bill. We really enjoy having you on, and may God bless.
Okay, bye-bye.
You bet.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.